Hello there, and welcome to this week's Closing Bell. You will have seen in the news that Donald Trump has been with the Emir of Qatar. Well, I'm with the Sultan of Swing today, Murray Dawes.
Howdy.
How are you, mate?
I'm good.
Well, we're going to talk about several things today. We're going to start off with a little bit about gold because we talked about gold last week. We'll go to oil and the US dollar and capital flows happening there with what's going on in the Middle East as well. Because we had kind of divergent views before about the way it might go. Interesting enough. Then we're going to mention our number one ticket holder here at the Closing Bell and a little bit about real estate. And then we're introducing a new segment driven by Belvedere off screen here, who's got a very large inbox, which is full of some comments that we're going to address. So a big show, Muzz.
Excellent.
So let's get bang on into it. So last week we talked about gold. You said it would probably go down. What have we seen this week?
Got smashed. So, I'd say we're probably on the right track there. I really set out a pretty clear roadmap saying that we were getting enough hints that possibly there's some selling about. That's not to say we know exactly where it's going to go from here, but I still think there's probably further downside. Things are a bit negative on the gold front, but really big picture still positive. So my view is possibly down towards 3,000 odd. I also did another thing in Fat Tail Daily just the other day, sort of saying the weekly MACDs were about to turn negative, and from here we just sort of follow them along, and that will give us the hints we want when it's time to start buying again. So if you didn't see that, check that out from the Wednesday Fat Tail Daily and sign up for that.
Absolutely, and we were talking about a little stock called Brightstar earlier, which has actually done quite well in recent trading, and I just thought I'd mention that because whilst gold might be trending down a little steam, that kind of value creation from the miners, if they're still pushing their projects ahead or hitting exploration results that are positive, can still get a lift in the gold price.
There's still a massive margin there,
gold stock
on offer. Yeah.
So still interesting opportunities in gold. But we thought we'd talk about oil a little bit too, because you've had it pegged as at around a key level. And then we were talking about Trump in Middle East, and I said, well, maybe oil sort of bounces out of this because the improved outlook for the world economy, because oil got sold down with the tariff fear. But you still think it's at risk of a heavy fall, yeah?
Well, this is if we bring Iran their production back online. They do a deal there and okay, you can bring back 1 million barrels a day onto the market, doing deals with Syria, the whole Middle East sort of calming down. So there's a lot of, risk in the price of oil on all of those problems getting completely out of control. And, everyone's saying, well, what way is it going to go? Well, if everything calms down, there's no need to be buying for more war risk in the Middle East or problems on that front with Iran blowing up their, nuclear sites and that sort of thing. If that all goes away and all that production comes back online, and we are still slowing down a bit anyway from all this tariff war thing going on, maybe the setup that I've been showing of if it does go down through those recent lows, there's a setup there where it could really cascade to the downside. So it's still set up in that way where it could happen. So I could show you quickly how it's
Absolutely.
looking.
I'll just mention our friend Gerald Salente. So he's a well-known commentator, and so when we're here in the office, Murray's got his laptop close to where I am, and I watch Gerald Salente. He's
a complete lunatic.
letting loose with a torrent of F words and all sorts as he comments about what's going on in the world. But he made the point that Trump and his family have a lot of money in the Middle East, and therefore he thinks that Trump will push to de-escalate the situations in the Middle East because, as Gerald would say, it's about the bottom line. So I thought that was an interesting observation from him. But you take us through the oil chart.
All right, so here we are, just kicking off, looking at the long term. We've seen this a million times, so I'm not going to go over it because I did do it recently. You could look up that closing bell from a while ago where I analysed everything. There's a big rally from 2020 through to 2022, so everything's based off that. And I'm just saying, this midpoint is so important for saying how strong the rally is. And you can see for the last few years, it's been holding, bouncing above there, trying to hold above that level, showing some weakness here over this last period. And this is where I was saying down through $69, watch out. And so we've seen that initial wave lower, and it's still in that downtrend. So the point is, looking at this, this is now a weekly chart. If we just look at the weekly trends, which are, more volatile and noisy, but, over time, they've been pretty good at picking out these sort of shorter term trends that have been going on. You can see that just recently it's kicked down into that weekly downtrend, and that's still a strong weekly downtrend that's going on. So anyone trying to call the low right now is getting a bit ahead of themselves. And as these trends develop, how do they develop? Well, usually once they turn down, you have a lot of mean reversion events. So you'll have the wave to the downside, and then you'll have some sort of mean reversion going back to the midpoint of the range or up to the sell zone. And then if the selling returns, that's when you get the next wave to the downside. And then we have another mean reversion event. You can see in there going up to the 20-week moving average. The selling kicks in again. Then we have another wave to the upside. This time it actually turned into a weekly uptrend. So it's like, is this going to be it? No, selling pressure comes back in, turns into a weekly downtrend, and then we're again looking at these mean reversion events once it kicks down into a weekly downtrend. So back to the mean, back to the 20-week moving average, big sell-off. This is where it's really got hammered. So this is where I was saying recently that, this weekly downtrend is happening. There's your 10-week moving average. Where is the selling pressure coming in? As long as the selling pressure is coming in and it's staying below that 10-week moving average, you've got to still be pretty bearish and saying this can still go down. So all the setup here is still negative. And I was saying just a few weeks ago, if it does go down through that low, that was just a couple of weeks ago, right? This is in our closing bell 2 weeks ago. I said if it does go down through that low, which is around $58, watch out, because we've had the retest of the breakdown level around $69. And if the selling pressure's there, watch out. And if it goes down through that low, it could cascade to the downside in a big way. So everything is still set up in that way. And if, this is on the edge of deals being made, a lot of oil coming back into the market, and we've had they've said, is it OPEC or someone looking at the demand profile for oil is falling away into the end of 2025 quite dramatically. So we're possibly going to have a large increase in supply. We've got demand going down, and we've got a setup which is saying if it goes down through $58, there's not going to be much support. So for me, I need to see oil really rally. I need to see like a close above $70 at least on like a weekly closing basis. Even monthly would be better. And if not, this big picture is saying below here, it's going to have to find a floor. And that could be all the way down there. But really my big picture view is that could be like absolutely brilliant spot to start loading up on oil, because I do believe in the story that oil is needed longer term.
Yeah, well, I know another idea doing the rounds was Saudi Arabia was going to increase production to sort of drive the price down and punish the guys that were cheating on their quotas in the OPEC alliance. So I'm sure Trump would be happy with low oil prices.
Well, I also putting pressure on Russia. Where's Russia get most of their money from? They get a lot of their money from oil. So if you smash oil prices, all of a sudden you're putting pressure on Russia. Maybe Trump wants to do a bit of that too.
Absolutely. So, yeah, oil, it's always fascinating, isn't it? You can talk about oil forever because of the implications.
Well, we're boring people, so...
Oh, yeah, sure. I mean, there's probably other interesting ideas out there. Well, you wanted to do a little stock. Well, or maybe it's not so little. Our Graphite play that's popped up lately, and you're pretty familiar with this one. So do you want to bring up Syrah Resources, which we're talking about? So
all right,
I always want to leave you with an idea. So this has been through the ringer like a lot of battery metal stocks over the last couple of years. It's interesting to note that there's a lithium stock called Core something or other. I forget the second bit, but they've got a mine in New South Wales, in the Northern Territory, that went into care and maintenance, and now they're talking about bringing it back online. So It does seem to be like this sector might be bottoming out and a bit of life coming back.
Well, I mean, for Syrah, I think they've also had problems of, domestic issues.
In Africa?
In Mozambique.
Yeah.
That there was problems and they had to shut down the mine and etc. So they've been going through quite a lot and they've got absolutely hammered. I mean, the whole graphite sector's been killed, and I've been wrong on the graphite sector. A few years ago, it was absolutely the strongest thing on earth.
Knees, yeah.
And then China came out, and I really believe China is deliberately crashing those markets that we're trying. They've got a stranglehold on, and that the West is trying to build businesses to counteract their strength. I really think China has deliberately increased production massively, like synthetic graphite in China. They absolutely ramped up production incredibly, crashed the price. And we also had the whole EV dramas and all that sort of thing, all the demand coming off the boil. But they really have crashed the price of rare earths, lithium, graphite.
Nickel collapsed.
Yeah. So if you're thinking on a 10, 20-year view, though, we still know graphite, rare earths especially, those sort of things are going to be really important for, the future-facing metals. We all believed in it at the time, and now all of a sudden when the markets have crashed, everyone's given up on it because everyone got killed. But is this the opportunity of a lifetime?
Well, that's a monthly chart you're showing there on the screen, right? So you can see the enormous rally from 2021, 2022, just went on forever, it seemed like that particular one. But then I remember actually my friend Headley, I'll give a shout out to, he did a speech and he said like the mining cycle goes in a clock-like fashion and we're at the top, and thus it proved. Look at that.
Yeah, and look how hard it is. I mean, look, I will be open and say I've actually gotten into this one on the back foot, like after it had crashed, and we sort of got in around here. But I'm looking very long term, and would probably look to add to it on more buy signals, which we're probably about to get on this one. And you can see how these things move, where you have the initial phase where the smart money gets in. Then you have the phase through here where you've got the smart money probably taking some profits and other people sort of trying to buy in on the hype. Then through here is where retail is absolutely buying it, knowing that, oh my God, this is the best thing on earth. And then you have the crash, which happens too quickly for anyone to get out. And then you have the rounding bottom, which is the capitulation phase. It's like, where is the point where you give up, from $2.
That's been a long 3 years.
That's been a long time.
That's a long time to grind it out.
Oh, yeah, it's been really difficult. I mean, you just look at the way, how long this has been. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So there's nearly a year of plumbing around 20 cents where everyone's pretty much given up the ghost. A lot of people who bought through this period up around $2, $3, at 20 cents, they've just given up. And if it's there for a year, it's like, oh, get me out, I don't care. And the question is, has that clear out happened, and are we ready for the next wave higher?
I'll make an interesting point, or I think it's interesting. Last year I was looking at a stock called Nanosonics, which had sold down. Nothing to do with graphite or anything like that. But I remember noting to my guys at the time that we were coming into the traditional tax loss kind of thing, right, where people wash out the trades that aren't working. But that one's actually started to move up. So that would be, again, another sign to me that the selling is probably out of it now.
Yeah, and it can move pretty quickly, because once you really do have everyone's out, once you have a rounding bottom where it takes a long, long time, every time it rallies, there's some other guy who bought it at $2 who's happy it's at 50 cents and oh, thank God, I'll get out. And all of a sudden it falls over again. Once that's done, it can actually rally really quickly on very little volume, because once the buyers start returning and news is good, the sellers are gone, there's not much volume around, and all of a sudden, bang, it just goes up 100%.
So that up bar is the mine restarting, right? Or they're saying that they're going to restart.
Saying that they're going to kick it higher. So that might be just that initial wave, but it's just showing you how quickly things can move after a year of getting hammered, and here moving from 24 cents to 42 cents on the month. So that might be the first sign of life, and then I'd be using my strategy, waiting for a pullback to.
It'll be interesting to see the market cap and the like what the asset's worth, just to see what sort of value is actually there and what sort of cash flows that they might actually look, because that's what the pros will start doing, right? They'll start looking, okay, well, if the mine's basically built and all that type of
and
thing.
all they're producing over in the US, downstream manufacturing. So in the battery space, so that's all, and they can expand on that as well. And they're totally vertically integrated and have one of the world's biggest, most highest grade graphite mines, and one of the few ex-China sort of graphite stories that's vertically integrated. And they're in the US with their plant close to OEMs. It's like all of a sudden you're going, oh, is that why it went to $3 a few years ago?
Interesting. So one to watch. Well, that actually just give me an idea. It's like every year we get the stocks that haven't worked, they get sold down because of the tax loss effect. It'd be interesting to table a few candidates of this year where that might be applicable.
Yeah, absolutely.
And see what happens. So if you've got any ideas, put them in the comments. All right, so we're going to finish today. I'm just going to give a shout out to our number one ticket holder, Catherine Cashmore, who no doubt will be watching this. So she's a real estate expert. She does her own newsletter called Land Cycle Investor. And the reason I bring it up, we talked about AFG the other week, Muzz, where you teased everybody, where you wouldn't tell them your final buying point. That's all right. They won't hold it against you. But I just thought I'd grab the release that they did last month. This is what AFG said at the time, or the CEO, he said, with all eyes on the global economy, predictions of future interest rate cuts in Australia becoming increasingly likely, and the resilience of housing through cycles, brokers are bracing for a further surge in activity as we head into the final quarter of FY25. So they had, in that release, the third highest third quarter volumes in history. And then CWP, which is a property developer, which I follow, acquired some land this week in South Australia, and they write here, this purchase forms part of Cedarwood's more assertive acquisition strategy to prepare for increased home buyer demand as purchasers respond to lower interest rates and government policies aimed at addressing the national shortfall in housing. So I just thought those comments were very interesting. So clearly the players that be in that industry see real estate going up and demand coming in, and
if they're saying with the first home buyers, aren't they? They're giving them
the 5% deposit.
Yeah, 5% deposit. I mean, there you go. That's going to ramp the lower end up massively. So
absolutely. So keep an eye on CWP and AFG because there's interesting things going on there, and property related stocks. Do check out Catherine Cashmore and her product. Capital flows. So let's finish with that before we get to Belvederes Inbox. You're suggesting the idea that Trump wants a lower US dollar. So the other thing about oil is, as I understand it, that the US became the biggest producer of oil in the world. So their production was supporting the US dollar. So higher oil prices support the dollar. As oil's gone down, the US dollar has recently gone down as well. So there could be some correlation there. But anyway, you tell us your thoughts on capital flows.
Yeah, well, I just read an article which was quite interesting with the Future Fund saying that they are starting to allocate money away from the US. Now, they have nearly half of the fund, and we're talking hundreds of billions of dollars. Nearly half was allocated to US stocks. So now with Trump talking about this Mar-a-Lago Accord, all these issues, how are they going to rebalance trade? Most of the story ends up on a weaker US dollar, ultimately, which will help to rebalance trade for the US. Is that where it's heading? If you think these big capital flows, these big sovereign wealth funds, those sort of people, if they're starting to allocate some money away from the US to Europe and Japan, because they're thinking about this bigger picture, what may be coming, and that the risk of remaining long US dollars, especially with half of their fund long US dollars, just imagine the effect that could have if things do turn down again, if a reason or catalyst for that could be looking at this US dollar. And I've shown you before that the US dollar index below around the lows 95, 96, something like that, it's looking like it could really get hammered. Big picture. So the US dollar is looking a bit shaky. It makes sense that Trump is looking to make the US dollar weaker. And are these big sovereign wealth funds going to start seriously reallocating money? And that's maybe selling US bonds. That's maybe selling US Mag 7 stocks and reallocating money to Europe and Japan as a way to balance their risks. That could be a flood of money that needs to come out.
Could some turn up here, you think?
Yeah, absolutely. Yeah, some could turn up in Australia, no doubt.
Rightio, here we go with our new segment, Belvederes Inbox. We've got a bunch of comments here, so I'm just going to read some of these out. So Aristal says, the hardest part is the uncertainty. Talking about the market, I guess. One policy shift can send stocks tumbling. Many Europeans may consider safer markets or greater diversification. So
pretty much what we're just saying.
Absolutely.
That, there might be a impetus for people to put money away from US dollars at the moment because of the risk.
Forest Hill says, love my Friday night fish and chips and Callum Murray. So that's the alternative name for the show, the Callum Murray Show. Sponsored by Seafood Czar Us. Richard says, thanks for putting a damper on my FOMO itch. So obviously someone heeded your warning about gold there, Muzz, so that's good.
Yes.
Tim says, keep up the great work, guys. I hope watch you every week and join Callum's service today. So thanks, Tim.
Oh,
thank
why
you,
Tim. Why don't you join my service? What's going on there?
Well,
it's more expensive because it's better.
He knows who the shrewd operator is here. Tim's a smart guy. Kieran says, Murray's phone call was to pick up groceries on the way home. You're probably right, actually, Kieran there. Callum's phone was his mum telling him she's watched his show. And I would, absolutely, my mum watches all my shows. Absolutely. Spot on. Rude Awakening says, re-off, whatever that means. This gold silver mining company recently got permitted and scheduled to pull out metal from the ground January 2026. Current share price under 80 cents, and the graph shows up and to the right. Re-off. I'm not sure if that's listed in Australia though. I like Darren's one here. It says, don't kid yourself. If gold was a serious correction, the mines will get clobbered. Load up at lower prices. So George, the compliance officer, would not say load up at lower prices. You have to be aware of all the risks and that type of thing. But he does make a good point that what we were saying before, that even if gold is, having a bit of a pause, the gold miners are still loving life, and they can still create value and through exploration.
Yes, well, I think what he was saying there though was that if gold does get hammered, the gold stocks will get smashed a bit, and they got hammered 10% or more on Monday this week. So they do still sell off, but
true. But you would think there'd be fairly solid support there from people willing to accumulate them.
Yeah, they've still got massive margins. They're still making, no doubt.
They're still making good money there. So that was Belvedere's Inbox. So if you didn't like that segment, write in and we'll include it in Belvedere's Inbox next week.
But if you did, leave us a comment and
we'll... absolutely. So your task this week is to work out what are the tax loss selling candidates where they've oversold because people have dumped them, but they could bounce. Usually happens around about May into June. And then we go into the new financial year and things can happen. Interestingly, I saw, what's it called? Mineral Resources got down to like $12, $13 or something. It's bounced. It's bounced up back into the 20s. So what's going on there? That one scared everybody. There's bargains out there all the time. So anyway, that's the closing bell for this week. Thank you, Muzz, for coming in.
Anytime. I have to be here, so...
And we'll take you out with a clip of Gerald Salente showing his usual form. We'll see you next week.
Oh, that's opinion. I mean, go back to opinion. Who the fuck would want to swallow the shit coming out of that clown's mouth?